Let's get right to the floor show to assess market reaction. We've got trader John Corpina live from the floor of the New York Stock Exchange and Market Vectors Index's CEO Stephen Schoenfeld. He's got $124 billion in assets under management that he's watching and moving around. John, I'll begin with you. Well, just another Tuesday in paradise here. I mean, we've got a lot of selling here. And even so, the VIX, I mean, listen, it's up 10%. I wouldn't exactly say that's totally parabolic, but if you just look at even the 5-day chart, the VIX has jumped 37% for the fear index. Tell me what you're seeing down on the floor as we kick off the final hour of trade.
Yeah, Liz, certainly a lot going on coming in after this long weekend. You're talking about the VIX in the last 5 days, the movements that we've seen there. Let's just back up a little bit. Heading into the weekend, the major headline was our conflict or potential conflict with Iran and troops and what are we going to do, and strike is imminent is the headlines that we're hearing. We have heard nothing about that all weekend long, the last 3 days, and now we're focusing on Greenland, right? So, yes, the VIX is going to react this way because of the uncertainty that's going on these geopolitical issues that we have here. The Iran headline has not gone away. It's going to pop its head up at some point in the near future. We're going to continue to talk about tariffs and the implications of that. But right now, there is certainly this fear that we're having in the market. We're seeing that in the VIX now. We've seen spikes like this most recently back in October when we were talking about tariffs, and back in November when we were talking about what the Fed was going to be doing with their next steps. So we see this reaction in the VIX. It's going to be interesting to see if we can get the VIX back down. We're trading above the 20 level. We've seen this spike above 18 a couple of times before. We have to see this come back down to see if, in fact, these headlines are going to still rattle our markets or it's going to pull things together. A lot certainly going on. You mentioned Davos. We always get a lot of information out of there. Today was the deadline for the 10% credit card cap and interest rates. Haven't heard much about that today. As you said, President Trump was speaking earlier. I was listening for the last hour plus to see if he was going to say anything about credit cards, about Greenland, about anything that was going to move the market.
Nothing yet, right?
It didn't help us at all, and that's why we're seeing the market sell off in the last hour.
Let me just say, John, I'm watching the leadership to the downside, and it's big tech. Everything else is following. I mean, we could look at some of these names: NVIDIA, IBM, Amazon, Apple, Meta. They're looking kind of sickly today. What is at work there?
Liz, listen, live by the sword, die by the sword, right? We talk about the Mag 7 stocks on the way up and how you have to have them in your portfolio and how you have to enjoy it while it's rising higher. Well, guess what? We're going to have days like this when they are the leaders on the downside. You have to just ride it out. You have to be patient with this. They are going to lead the swings, but you do take the good and the bad. Today seems to be one of those bad days. But I think as the week progresses, economic data, earnings season, info out of Davos, we're going to get a little bit more stability in this market.
Yeah, I'm wondering if we can put up those boards, because NVIDIA is down about 3.7%. IBM, here we go. No, that wasn't the one. But yeah, IBM down 4.5%. We've got Hewlett-Packard, Dell. So I can see exactly what's happening here. Let's stay right there, John. Let's bring in Stephen Schoenfeld. Stephen, even before this, you were saying this Sell America trade was something that was sort of bubbling up on Wall Street. And we've got a whole bunch of articles today suddenly talking about how the risk-off trade is to exit anything that is involving America. So, you know, Investors Business Daily, Bitcoin, US dollar skid, gold rallies on Sell America trade, Reuters, Financial Times, Sell America. Listen, it's just going where the flow is. So where are you going with all your assets under management?
So the secular shift away from the U.S., peak American exceptionalism, was actually the end of 24. That was when the U.S. market cap relative to the rest of the world peaked. So even as the U.S. did well in 2025, international equities pretty much doubled, and some emerging markets did triple. So beneath the headlines, it was already shifting. Now we have an actionable event, something very clear where people are worried about American stability, worried about the breakup of NATO, and literally you have European pension funds that hold huge amounts of debt and equity considering selling. Okay, so now it's really coming to reality.
Let's specifically look at 3 countries that have far outperformed U.S. markets, and not just over 5 days. but over the past 6 months. So
Sure.
the Nikkei 225 in Japan.
Yep.
Performance here month to date. Don't know if we can put that up,
Yep.
but up 5%. Over 6 months, up 33%. But Japan is having some dramatic bond issue today
Yes.
where people are saying the bond market is cracking. You still like the Nikkei?
So Japan overnight had a very significant bit of fiscal worries. The bonds fell, the yields went up, and it affected the market. So it's down a lot. But the overall secular trend and government policy, I'm still positive on Japan.
And Korea, the Kospi index, up 15% month to date. And then you look at the gain over the past 6 months, up 52%. You also really like Israel, the Tel Aviv Stock Exchange, which is a really fascinating move because if you look at it over just the short term, up 17% month to date. And then over 6 months, it's up 77%. But is the best way for us to be able to participate in that kind of move by simply buying the index?
So I'll start with Israel since you mentioned it second. There are ETFs trading on the NYSE. 2 of them track our indexes. One, the ticker is ISRA. You get the whole Israeli market. Also, if you're interested in Israeli tech, there's an ETF, ITEQ. So American investors don't have to go and put the money in Tel Aviv. With regard to Korea, there's also ETFs. Korea government has a very significant policy change, which they call value up. They're replicating what Japan did a few years ago, and they're trying to get corporate governance improved, and the market has really responded.
Really quickly, John Corpina, what do you think happens in this final hour? Are you seeing anybody buying on this dip? Because these dips are rare, and people are kicking themselves when they don't come in and at least buy certain things on a discount.
Not yet, Liz. We're not going to see it today. I think no real solid comments coming out of the president today when he was speaking isn't going to help this market. Investors are going to wait till tomorrow. There's no need to dip your toe in the water right now.
John Corpina and Stephen Schoenfeld, thank you both very much for joining us.